Here's an excerpt of an interview I did with Simon Dixon. Now, he's an expert in cryptocurrency and on Bitcoin, and he's also co-founder of an investment platform called Bank to the Future. Now, if you want the full interview, you can sign up for our Patreon membership, and you'll see a link above me so you can do that, but also a link in the description below me. So now, here's my interview with Simon Dixon. Brilliant. Well, thank you so much for agreeing to talk to me, Simon. Interesting story about how I came to you. I actually said in an interview with Jim O'Shaughnessy, could people suggest in the comments a good person I could speak to about cryptocurrency and about Bitcoin? And so many people suggested your name. So thank you for agreeing to do it. I really appreciate it. And
Pleasure.
I guess, you have a kind of similar background to me. You worked in investment banking in the past, and then you moved into cryptocurrency afterwards. So you've got a very broad background. So it's not just cryptocurrency, which some people have only worked in. You've also got that kind of broader experience.
Yeah, sure. And I think my background story helps how I found it to make me reach that conclusion really early. And that is, I spent the last 20 years since studying economics on obsessing over the subject of money. And so I wasn't really satisfied. I did a master's at University of Manchester, and I wasn't really satisfied with the models around how money is created and how it interacts with the economy. And so I kind of parked that subject, got busy with career, started as a stockbroker, went into market making, then finished in my final job was in corporate finance doing IPOs. But in 2006, I decided to return to that passion. And I started presenting at lots of universities on the subject of monetary reform and banking reform. So I joined that community, and that led me to the Bitcoin community a few years later.
How do you see Bitcoin fitting inside a portfolio? And I think you've just done a series of videos on just that topic. Is that right?
Yeah, so we created a 4-part free video series called retirementplanb.com. And there you can go through the different ways of how to think about it and how it fits into traditional planning. But really, it still is, think of an alternative asset class into traditional financial planning and financial advisory techniques, over time. And this actually is interesting because it brings into the previous conversation where you can actually get income from gold and Bitcoin, but you can't hold gold and Bitcoin and get income. You can give up ownership of your gold and Bitcoin and get income, but you have to accept some counterparty risk to do it because financial products exist where you can yield off your collateral. And so really this is the types of things people need to consider. The first thing is, well, what is my stage of life? And Bitcoin is, I think, in terms of risk profile, though I am very bullish on its future, when I put it into the thought of risk, it's a very tricky thing to think about because I do think that the traditional financial system is very risky. I do think traditional real estate is very risky. I do think that stocks are very risky. Now, Bitcoin is off the scale risk when you're analyzing it against traditional thoughts of what risk means to you. But at the same time, I believe that holding money at a bank is very risky because of the counterparty risk and the risk of bail-ins and all the things that can happen. And the fact that many of the bank insurance schemes are completely underinsured. And they only have about 1% of all the deposits that they're guaranteeing. So to me, bank deposits are risky, but that would be the traditional cash is king. I understand the argument, but then Bitcoin to me is actually insurance against that. So it solves one risk, but it has another risk. And so people need to think about those types of risks. So the stage of life you're at, Bitcoin is a binary bet to me. It's either worth millions of dollars or it's worth nothing. And it's known what the risks are that would make Bitcoin worth nothing. But if the trends continue and the demand increases at the rate, for me personally, it's produced, abnormal returns. And I'm even embarrassed to talk about, but it's been 9 million% returns in a decade. And so, that sounds like something that is a Ponzi scheme or a tulip bubble, but then again, you do get those types of returns if you are a seed investor in something like Facebook or Microsoft or Apple. You invest into something and then it actually becomes one of the most valuable companies in the world. So it's a concept that 10 years ago there was this idea, and it's gone a lot further than it should have. But now it's actually reaching that stage where more and more people are willing to think of it like that. So where does it fit into your portfolio? So me, I have a traditional portfolio that exists to serve my retirement plan. It's mainly based around US dollar denominated assets. And it's based upon a thesis that the Federal Reserve can actually figure out how to maintain one of the craziest, what I call a regulated Ponzi scheme, which is traditional dollars, and maintain that and keep it alive through financial engineering, which is what we're experiencing right now through monetization. But one day the dollar won't be the world reserve currency. And so for that, I have a second portfolio, which is based around gold, which is the thesis that I don't really know which currency. I have a guess. I think that China is the next empire. I'm not sure about their currency because the different economics of being such a net exporter. But gold is what I would expect to have should the dollar no longer be that world reserve currency. And I believe we're at the end of a very problematic debt cycle. But then what happens if you can't access your gold? Why? Because you hold it in custody. It's very hard to store. You put it in Switzerland, you put it in Singapore, you have a lockdown and no one can access it. Then, or you have what happened during the last Great Depression. It becomes ownership of it becomes illegal in one country. Then at that stage, Bitcoin could be your life jacket. And so because that life jacket exists, my Bitcoin portfolio has fully outperformed all of my other portfolios and allowed me to rebalance it over time, so that I can actually have these different security mechanisms. So that's what I talk about in the free video series, how to kind of think about this and manage it. And everyone has their different risk profiles. So, if you're near to retirement, then you probably you can't take such risks. If you're younger, then you can take such risks. And that's how I think about it, really. And then you need to think about what your portfolio is to risky alternative asset classes and think of it like that. This is a confusing subject that people talk about Bitcoin being volatile, and I've been around ultra volatility, and it has come down over time. I've seen my $30 Bitcoin crash to $3 in one day. I've seen my $1,250 crash to $250 in a few weeks, and I've seen my $20,000 Bitcoin crash to $3,000 in a few months. And I fully expect, not financial advice or anything. You have to do your own research, but I fully expect my $100,000 to one day crash to $30,000. And when you manage your financial affairs in one currency, so if I have to pay my mortgage and pay my rent in one currency, then earning another currency makes things very hard to manage. And unless you are, implementing some kind of hedging strategy, and most people just don't do these things. And so that makes it very difficult. So things would have to become priced in Bitcoin for that type of model to work globally. That I think is actually quite undesirable. I do believe in competing forces, and it's healthy to have competition within currency. So if one government destroys their fiat currency, then another government can actually compete with a more responsible monetary policy. And if governments all around the world abuse the money printing, then there's this fixed supply form of money called Bitcoin. And then if Bitcoin gets completely manipulated and corrupted, like sometimes gold has been, then you have all these competing forces. And I believe in free banking, as it were, where you have competing forms of currencies and choice. And I think that creates a much fairer and better market.
So one of the things that we talked about before we started recording was how you can actually be taxed on your gains in Bitcoin, because obviously, government's not going to accept Bitcoin for tax payments. So we were talking about why you're living in the Isle of Man, which is a great story. Could you just share that?
So Bitcoin is and has been very hard to classify, and different countries classify it in different ways. Some consider it a commodity, others consider it a property, others consider it an asset. And the interesting thing, even the same countries don't agree. Sometimes you have a regulator, a tax official, and in the case of the US, the Commodities and Futures Trading Commission think it's a commodity. The SEC might think it's a security. And the tax revenue might think it's a currency. So one of the very first things we did when I first got involved in this industry is we formed something called the UK Digital Currency Association when I was back in the UK. And we had to consult HMRC, the equivalent of IRS in the UK, on how to think about it. And they produced the first tax guidance, which was, well, it depends. If you're using it as income, then it's treated as income. If you're using it as an asset, then it's subject to capital gains. And if you're using it as a currency, then it's treated like a currency. So it was based upon the substance of how you're actually using it, which made it very complicated. So several years later, Isle of Man became the first government that tried to build a strategy around making good regulations for Bitcoin and crypto companies. So they invited me to speak at the 2014 conference. And they had a whole plan. It didn't quite work out because the Isle of Man is what's known as a crown dependency. And therefore it's got an independent parliament and government, but it shares its currency with England, and the Bank of England actually said, if you support this, then there's going to be trouble for you. We'll remove clearing to your island. So it didn't actually work out the way that they wanted it to work out. But I discovered that they have a pretty good structure for those that their tax. The way that the tax works is you can realize a gain, and then you're capped on the amount that you realize on that gain. And so I've seen many people struggle with this because they've been trading all sorts of crypto. They may have come from a place where they couldn't have declared it, even if they wanted to declare it. And so, it's evolved over time, but now all of the tax authorities, once you get a $500 billion market, tax authorities want their piece.
So I hope you found that interesting. I know that I certainly learned a lot from him. And I think he's got such a profound knowledge of cryptocurrency because he's been working in it so long. And he's also been investing in many cryptocurrency ventures himself. If you enjoy our videos, you can now support us directly via YouTube. Just click on the link above me or in the description beneath me. And if you do that, then you get a badge by your name, which I've designed, which looks great. And we'll know you're a supporter when we see your name in the comments or on one of our YouTube lives. So please do that. We'd really appreciate it. And as always, thank you for listening.